Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by the lab today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. And what this stream is about is integrating Bookmap order flow tools with auction market theory, using the volume profile as a chassis for structured trades that are shared in the Bookmap Discord TraderLab community. TraderLab is a community of like-minded traders who come together to leverage our collective experience. This stream is about the business of trading and helping developing traders build out a plan and an understanding of market mechanics so at times they can get aligned with the market and develop structured trades that have a statistical edge that gives them the potential to create an actual path to a sustainable business. So it's really a serious community, and it doesn't matter how long you've been trading or what you do, and I'm even going to suggest there isn't a right way to trade. Because I've often get asked, well, not only how do you trade and what do you do what you do? I'm going to suggest that this is a business of building foundation and market understanding. And I'm going to also suggest that it's not plug and play and that trading is not a mechanical process. So you can't take what one person does and now imitate or replicate and anticipate that you're going to move an ATM into your basement. What it really becomes is a process of understanding the flow of the market, the flow of the orders, and participant behavior. When you start developing this understanding, then you'll be able to start to recognize potential change and alignment. And the idea is to recognize these changes before most other traders do. Now, of course, like everything, the outcome is random, and it doesn't mean you'll ever be a sustainable trader. But if what you're doing now is not working for you, and here's how we define that. Obviously, it's because your equity's not growing. But what most of us do in our development is we all have random winning trades. And the belief we get is that if I just make it better, that'll take care of everything. But the question I pose to everyone who wants to create sustainability is, what happens if the process you have is defective, and what you're trying to do is take randomness and make it into sustainability, predictability, certainty, and in spite of the random winners, you're still leaking equity. What's the message, you might say, in that bottle? How about the message is, in spite of the random winning trades, you still don't have an edge. If you don't have an edge, and let's look at this as gaming, then you're on your way out of business. And you're still going to have the random winners. Just think about how gaming operates, or casinos. Casinos have the edge. The dollars get extracted from the gamblers, but the gamblers still have winning hands. Over time, though, who wins? Over time, it's the house. So what we want to do is attempt to sit on the house side of the table, and we will pay the gamblers. But the difference is the gamblers are the ones who have the random winners, not the house. The house, I should say, does have random winners, but they have it with the edge. So if you have no edge with random winners, you're on your way out. And if you have the edge with random winners, you're going to accumulate in a random distribution of outcomes dollars that flow to you. So we have to figure out, how do we get those dollars to flow towards us versus gambling, having random winners and still leaking equity. That's what the purpose of TraderLab is. And the idea of the TraderLab, and the reason I created it, is to strip away the nonsense and bring this down to the basic level of, and I say basics, it's actually advanced, but it's not complicated. What's advanced about it is changing your beliefs in what the business is. That's what's going to be difficult for you, because our primal wiring kind of moves us in a direction of seeking to avoid risk and create certainty in an environment where it doesn't exist. So what we need to do is understand what drives us to make choices, but understand it's not aligned with the business we're actually seeking to be in. When you can reach that place, then you know what the real obstacle is. It's you. I believe anyone who comes to TraderLab can learn how to trade. It's a sequential process of building. But dealing with yourself and what you need psychologically versus the business is where the gap, I believe, lies. But you can learn about these elements in TraderLab, and then it's up to you to build out a plan that fits your psychology and also addresses some of these issues. And I always have to say, past performance is never indicative of future results. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this isn't a trade calling room, but this is for educational purposes only. And if we get into something, we'll talk. Also, a friendly reminder, I'm streaming from Costa Rica with a failing laptop, which adds a certain dimension of randomness. So if I drop out, I will return, hopefully. It does take about 5 minutes for me to recycle, and this laptop is having intermittent failures. It's at a component level. I'm just going to say, let's not worry about it, but be advised. So if you're in YouTube, I will come back. Just take some time. The other part of this is I'm going to show you a higher time frame view. Now, you must understand what I do or any other trader does is individual to the trader. So my perspective on the market and what I operate in, and at least what I share in TraderLab, is a broad stroke to help developing traders build out sustainability. So I'm not here to rock and roll and trade short rotations. What I try to do is help developing traders see the shorter rotations for triggering processes, but try to trade a larger rotation of the broad strokes. So let's look at what happened here. Now, we all know about the Greenland, what's the term I want to use? News. I have other thoughts, but that's just me. Now, let's look over here. When we were down here, at the time, we had a level around 21, which was this low. And all this changes as the volume comes in. That was support in this area. Then we had a reversal, and the shorts in here were getting squeezed. On this day, this yellow line was the retail price or highest volume. I always think of this like shopping. And really what the market is a shopping experience or an auction. And the idea of the market is what's too high, what's too low, and what's fair. So on this day, we found too low. So there's sell stops under there. And then the shorts that were in here got squeezed, okay? So then the shorts that are in here get squeezed. And this set up Friday. And Friday, we tested the high volume in here, which is too low, which set up longs primarily. And then the potential on Friday. And now here's the thing about last Friday was it was ahead of a 3-day weekend, which is problematic for anybody staying in the market. So you can get evening up, flattening out, or whatever. So the possibility on Friday was to come back up here and squeeze. Well, we didn't get there. That's okay. And we got back to here, which is not material, but it's just where we got, and then the longs liquidated and we were in park. Then over the weekend, we got the Greenland news, and it disrupted the auction. And we had this gap on Martin Luther King Day where the market, we didn't have a full session, it was a partial session. And then the longs, who are trapped with sell stops under here, shall we say, went on the rotisserie. And then we opened. This was where the short was. The retail price from Martin Luther King Day, the Monday, this set up our short, and then the targets were take the stops out here, take the stops out here, and the naked volume point of control from this day was there. So that was the next target, and that's where we got, and that was that, okay? Now, then the next possibility was yesterday to trade inside and come down and test this low. So for me yesterday, primary trades were shorts. And actually what we ended up doing, I think, let me get this straight here, was we came here. Got to get my brain back in gear. I think it was this high. You know what? I forgot. It was up here, and then it was shorts for me to come back and rotate down. And that was all fine. Those were all very nice trades. And then we got news, and then the news is a disruptor. And the news that took us down was now canceled. We'll get back to you later. And that creates what? the short squeeze. And this is what happened yesterday, the short squeeze. Then today, it sets up a couple possibilities. So for today, the possibilities were early continuation buying back to test where the disruption was, which was my plan for today, and then potential shorts to come down on a rotation. And for me, it's a long bias, but as a day trader, I have a level up here I can work with. And the logic for me was that this was support, and support can become resistance. So then it was shorts. And then my outside for this short was down around 23.25, this outside edge. So I was kind of looking for this. You know, it could be 30. 30 was an important level previously over here. So 30, 25, 24. And there's no precision in this. And of course, it's not for me. What I'm trying to do for developing traders is to help them view one side of the market, deploy structured trades so they can anticipate where they might show up, and then get the trade on with triggers that we vet in TraderLab, and then learn trade management, and then just take what the market offers. It's not about get long, get short, get long, get short. That for developing traders, and depends where you are, is going to create FOMO, over trading, and put yourself out of business. So, and early on in the streams, when I've been doing this, I guess going on 5 years or something, I used to show, a lot more active trading, but I always kind of look for feedback from traders, and we always have traders in TraderLab that, it's all different traders. There's no, one trader. So if you're not successful, you really have to tear down what you do and then build it back up, in my opinion. So I've kind of gone a little different approach, because if you can sustain yourself and become profitable in a higher time frame, which means you will take stops, but you have larger ranges when you get in alignment, you're going to potentially be able to build sustainability so you don't go out of business. And I think that might be pretty important. So that's kind of where I've adjusted what I do. And once you can trade in the broader stroke, you can start moving your time frame down. But each step, if you don't understand the broad stroke, you can't shorten the rotations down. Now, why would the market go up? Let's remember the thing. What happened? Let's go back to the higher time frame. If the market is short and we get the news and it changes this, what do we have in here? Longs. In here, longs. What do we know about up here? We have shorts. Well, if I know this was too high and I rejected it because it was the last place that was too low, I know if I come back to it and I get continuation buyers in the morning, this is the logic. Now, what do I have in the market? And this is what I'm going to show you. What do I have? I have longs in here, and I get new longs come in up here. So I have buyers and buyers from here. Well, if the market gets long, which means lopsided, and in the ETH, I am also long, then the possibility is the ETH inventory will rebalance. In other words, the longs take profits, and the longs in here take profits. Those are called responsive sellers. And what they're doing is responding to the higher prices. And we run out of buyers because the price might be, what? Too high. So at the time, if the price is too high, where are my sellers? They're going to be the late buyers for the continuation and the weak buyers in here. Does that make sense? And by the way, if you're visiting in YouTube, I can't see your questions. Apologies, I only have one monitor working. So if you're in Discord, I can read it on my phone, but that's about the extent of it. So let's see what's going on here. And let's now go down to shorter time frame. And hold on 1 second. Let me just see what's going on here. Okay. And I'll give you some statistics so we kind of understand what we're looking at. So let's look at the lay of the land. This is going to be the RTH Open. Now, there's a couple things you need to know. First of all, we have something yesterday called value area high. This is very important level because this is where 70% of the volume took place yesterday. And don't forget, we got into the squeeze theory yesterday. So the shorts got squeezed yesterday, and because of the news, and if you saw the news, and we reversed, fine. Now, the ETH low. So this is the first piece. Now, when I look at the market, I look for evidence. So before the market even opens, I'm going to look and see, well, what's going on here? Well, if the ETH low is here, and I know this is the outside edge of value, if I'm opening outside of value in a gap, then let me just see where I am. Let me make sure about this. And this is by level that I showed you at the top of the stream that was too high, and my open is here, and my yesterday's high is here. What am I doing? I'm opening gap outside of value, outside of range, right? And this is my first area of resistance that we broke from. So what I know is, what's the possibility? Let's go back to the premise. I have longs in here, and if I open higher, I can get additional buyers. And then if I test this and it's too high, I can take the late buyers and I can take out weak longs in here, and I can come down somewhere. Now, the somewhere is part of the thrill. And I have a level at 30, and I have another level down in the 20s here someplace. Yeah, this. So right here. So I already know what might be, and let's look at the logic. This might be an outside edge, and this might be an outside edge. And I know this because of what happened in the ETH, which is the last auction. Now let's come back to some statistics. There's over a 90% probability, and you have to vet this for yourself, when we open higher outside a range or a gap, that we're going to check either the ETH high or low. It's about 97%. Past performance not indicative of future results. There's about an 81% probability we get here. This is the overnight volume point of control. Now, what are volume points of control? They are high volume or retail prices. So in the ETH, this is the last auction, 82%. Previous RTH, where we broke from, which was now too high, is here. So and we're opening above yesterday's high. So again, what do I anticipate? If this is too high, this is the last retail price. If I get in the range, I can be looking down the financial food chain. If I take out the ETH high, which is here, my probability of getting the ETH low also is not high. So when I take shorts, I can stay on the shorts, especially when I get inside of yesterday's range. But I also have to know that I can anticipate, after what's called responsive selling, that I can get the buyers, because if I can get above here, I can then come up higher and continue the auction that was disrupted. Does all of this make sense? So this is part of the trade plan. The trade plan is, what's your trade? What locations do you have? And then you wait for them. And then when you get to and there's no precision. The other part of the thrill of trading is there's no precision in this. It's just maybe. So let's go take a look. Let's just see how this thing manifests itself. And I post these in TraderLab. Now, you have to understand something. I am only trying to get traders to trade and see a broad stroke, because you need time. You need time to anticipate behavior, and you need to calm yourself, because what the fear, the adrenaline, the dopamine, the rest of it is all flowing. That's the lunatic under the hood. The best way, in my opinion, to manage the lunatic is not to stimulate the lunatic. And that means anticipating where behavior might take place. So let's go take a look at the first trade. RTH open. This is called developing volume point of control. Let me show you some very micro behavior. Now, when I see behavior, I already know, this is on my chart, and I have liquidity sitting up here, and I have liquidity sitting here. What do I anticipate? I anticipate buyers from the ETH. Don't forget, we tested that value area high in the ETH, and it was too low, and my ETH is low there. So that already tells me I have longs in the market from the ETH, and this is the ETH high. I have over 9. Let's remember, I have over 90% probability to test the ETH high low, and the high volume from the ETH is where? Higher, and it's near the upper side. So what I anticipate is buying, and then it could do anything, right? And if I see my sellers, then I have an 82%-ish probability to go here. I have about a 75% probability to go there. And then I have, whatever's below. And then I don't know, okay? And I'm looking to take out the late buyers who are weak, and then weak longs. And then, depending where we come, get long or stand down. And that's just the trade that I discuss here. So let's look at the first trade. So I'm going to show you some integrated pieces. And this is multiple time frame integration. And the way I like to describe this is microstructures inside of higher time frames. So this behavior, this high volume, was the highest volume from the day we broke away from. Let's just go back and look where it came from. It came from there. So if I, in the morning, come up here and it's too high, it's a test, I have this possibility to come down. And I know the ETH low is down here. And I don't have a high probability getting here. So if I take shorts, you might consider it a counter trend trade, but it's the trade that presents itself first. So here's the thing. What do? Do you wait for longs, or do you take the first trade that shows up that is structured, which is, for me, this? Getting long is going to take more skill because it's going to be a little more nebulous. Now, I did see a long setup, but that was it for me as far as what I consider primary in-your-face trades, because the logic of the short was to take out the weak longs. And then what happens, the way the market works is it rotates on itself in all time frames. So if we get the shorts in here and, we already know what's too low, then at some point, if we run out of those sellers, then the buyers who are looking to come back and clear this to return here, possibly, are going to take control back, and then we can squeeze out the sellers. What I'm trying to suggest to you is the market runs in rotations. So you can pick a side, and it's not necessarily a right or wrong side. It's the side that you can align with, and then it's always the same in the sense of there's initiators, there's responders, and in different time frames, there's initiators and responders. So you can pick a rotation. And I always suggest trade with the dominant side. Well, in this time frame in the morning, the dominant side was the responders. And then once the responders are done, they become the buyers because they get squeezed. And then the initiators from here take control back. Now, where that exactly happens, so for me, it was here, in here, and nobody knows. Let's remember what we know. We know where too low was, unless it changes. So it's kind of a vertical chess game, and it's multiple time frames, and you just need to identify a time frame where you have vetted trades. Hope that makes some sense. Okay, let's go. So RTH open, who knows? Now, this is called VPOC migration. VPOC migration is a way to read the volume as it comes in. Now, it's very micro. So what I'm doing is this yellow line is the developing time frame. It resets to 0 at RTH open. So you get your open, which is here. Now, I do get some data lag here, so some of this is a little bit out of alignment. The RTH open is here. So there's like a second or two, and it's just because I'm in Costa Rica And when the wind blows, things get weird. Remember, if I drop out, I will recycle back, especially if you're in YouTube, the link will recycle. And thanks for your patience. So what this says right here, there's more right here, there's the volume. I have my buyers above here, so it says going up. I have resting liquidity over here. So this is my first obstacle, and over 90% probability to take out the ETH high. Now I have resting liquidity here. Here's the possibilities. I can go here, break low, and get my sellers, or because I know I broke from here previously, this area is the area for me to get short. So let's take a look at how it manifests itself. I have a sweep. This is suggesting the potential for a counter rotation. So this is setting up a suspect. I have a developing volume point of control here, new retail price. Now it's kind of logical. When the market opens, there's not a lot of volume. If I leave this microstructure and there's more volume here, think shopping, this is now the retail price. But what I'd left behind was a retail price in a higher time frame. This is developing. This is established. So these are the two areas for me. Let's just watch. So right here, this is my support. This is support. This is a resistance, and I'm observing it. I am looking for it. So I have this and I have this. So these are two areas of potential behavior. I can anticipate a counter move here because of this, and then I have to see, and this is my support down here. What happens in here? So support. See it? This is a sweep. So what this is telling me, rotation down. This suggests potential rotation up. Alignment is right here. I can't draw on the chart because I'm trying not to tax this computer. So this is support. This suggests, now it could just keep going down. I would not have a trade here unless I sold this. Let me also tell you another part of this. If I did get short there, my stop's got to be out here above this because I have resting liquidity, and I can very easily come up to the next level. So if I'm selling here, my stop's going here. My stop's not going there. Can't go there. But I don't have a trade here. So right here, emotionally, I look at this and I'm going, gee, you could have sold that, hindsight. But I don't have a trade. So I'm going, well, I guess I missed it. Who's saying that, by the way? The lunatic under the hood, the one who's judgmental in hindsight. Really smart in hindsight, but not so good in the moment. Now I'm getting more sweeps and I have location. So now I'm looking for a short. And again, and why? Let's go back to the thesis. The thesis is late buying, come back to where we broke. That was too low, now resistance, and longs in here, and rebalancing from the ETH. So this sets a short up. This is a short right here. Sweep, break. You could be selling it here. Let me show you where else. Now, the only reason I can do it is because I'm anticipating it. And if I sold it here, which is also legitimate, my stop's got to be above here. I'm just telling you. When it breaks here, right here, where's my resistance? This now is resistance. Break here. This is resistance. This is resistance. All this becomes resistance. All these are potential locations for shorts. This is where it fails. That's all I can tell you about it. And these are the responders. These are the folks that are getting thrown under the bus. Now, I have a target here. Now this, I already got the ETH high, and this already tells me maybe this is too low. Now I'm going to show you the next trade, because there's another trade here. And this one was very hard. This is a structured trade. It's a continuation trade. It's called mean reversion. Let me show it to you. Now, there's two things that happen here. We get what's called VPOC migration. This is now the retail price. Now, remember how the auction works. It is a shopping experience. So if this is the new retail price, because the volume is here, and I still have outside locations here, and I don't know if I'm coming here or not, it's not my job. When this drops down, this is the lowest retail price of the most volume right here. If it becomes too low, which I won't know until hindsight, and this is now the retail price, and I test this, and it's too low, then I can get a counter rotation. At this point, I have no idea if we're going to go lower, because nobody knows that, or I'm just going to pull outside, and this sets up something called mean reversion, which are short continuation trades, and this is the location. Now, what a mean reversion trade is an outside-in trade. So it's a plan in the plan. So for me, it was shorts, then it's trade management. If you get taken out, all this sets up is now a rotational condition called reversion. And the idea would be to come outside, and we have a structured trade called VWAP to VPOC. Here's my sweep. My liquidity comes in here, and then I have my stop sitting at VWAP and mid. And when I look outside, I have micro high volume here, so that's resistance, and an outside edge or low volume area up here. So what I know is if I come outside somewhere and I have a valid trigger, I can take a short, and then I'm looking for it to come back here. So this would be the next trade. That's in alignment with the current context, notwithstanding what this says here. So I already know, based on this, that if I take a short, I got to clear this, then I got to clear this to go lower, and then I got this. So I already know what I have to do. Primary is to come here. And why would that be? Because this might be too low. So let's see. So this is a short. Now, we had some discussion in TraderLab that this was a short. It's not for me because where's the location? And where's the stops? They're going to be, we can anticipate, not predict, that we can have behavior here and here. And part of that has to do with retail trader behavior. So when I get this, I know I got my buyers. Why doesn't it go up? Because I got my sellers. What do I have here? Buyers, buyers, buyers. Sellers are below the buyers there. There's your break. That's your trigger. There's your microstructure. You could sell this. You got to go here. And then the next part of this is down to here and out the bottom if it does or it doesn't. Let's look. Once it comes back here, there's no trade. Because what did we not do? We didn't get here. So for me, this would be the last short. Now, the next thing that can happen here is, what do we remember? Continuation buyers, take them out, get the weak longs out, and then depending where we come down, possibility either for longs or you're done with the shorts and you're done for the day, depending on where your edges lie. So what I like to do in TraderLab is just help traders take primary trades that give them the biggest potential range, and that's the end of it. Now, this is yesterday's high. When we're below inside yesterday's range, we're okay on the shorts and we're okay here for the trade. This is it right here. So if you can't get below this, where the buyers were, that's the end of it. And then you come out of the range, yesterday's high, there's nothing to do, for shorts at least. Unless you're a very short-term trader, and for me, not so much. VPOC migration. What does this say? Let's come back. What was this? Too low. What was this? Last place for a short. What's this? Too low, too low. Once this happens, it's over. Now, in the TraderLab, we have a structured trade, and I'm go very intentionally slow. If I come outside our yesterday's range and I get this, what does this say? This is a potential long. What is this? Now let's come back here. What's this? Potentially too high. What's next? Over 90% probability to take out first hour's high or low. What does that put on the hit parade? This. Is everybody with me? And then we can, go wherever. These are structured trades. Now, I want to be very explicit. If you're visiting, whether it's the first time or whether you've been here a length of time, what is my objective? It is not to impress you. It is not to encourage you to blow yourself out of the business. It is to slow you down and give you time to narrate, to define, to become disciplined and patient. I've shared structured trades here. These are structured trades. You'll notice there aren't a lot of trades. But would you be a profitable trader if you took these trades? If you vet them, by the way, and you're going to take stops along with the rest of us, so we have to get over it. If you understand, and the idea of the TraderLab is for you to understand market mechanics as a broad stroke. As you develop, you will begin to vet and understand shorter term structural behavior. But if you can get short here and you can and you get out of your trade here, take this to here, which would be a target, and then either get taken out of it and scratch or manage the trade. That's all part of your plan. Would you be a profitable trader? Yes, no. If you waited, once the narration tells you shorts are off the table, and remember, we already had this anchored from the ETH. This is part of what you need to understand as far as auction mechanics. Same thing as why this is a short up here, auction mechanics. You would then be off shorts after this. Now here, you might not have a long. Somebody else could. You'd be fine until here, and then you're off the shorts. Now you're sitting back again. Now this is a structured trade in the TraderLab right here. There's your long. Where are we trying to come back? Here. Where did that happen? Right there. Can you trade this? You see what I'm saying? So would you be profitable on the day if you only took the shorts to there, and then only took this long from here to here, or held a runner because of over 90% probability of now squeezing the shorts out? The reason we went down is to take the weak longs out, and now we have our buyers built in here, and this is market mechanics. Market goes up to go down, which was this morning, and then goes down to go up. Is this logical? I hope it is, and if it's not, that's okay, but this is what I've shared in TraderLab. I am attempting to give you the broad stroke and keep you, and my objective is to keep you from FOMO, because this forces you to slow down and be intentional and to wait and define change. You need to do it, I believe. I've trained a lot of traders over the years, and you guys know about me. Let's just say ran trading desk, had my own company, managed a lot of funds over the years. I'm doing this going on 47 years, and I've always seen the same problems for developing traders. The juices are flowing, the emotions are triggered, the fight and flight, and all this stuff. You've heard of FOMO. Well, if I take you if I'm training you to become a potential sustainable money manager. What would I be training you to do? Wouldn't it be to minimize your risk, maximize your rotations and reward, versus sell this, buy this, sell this, buy this, sell this, and blow yourself out? Would that be doing you a service or a disservice? So when you go out on internet world and influencer world, you're going to see rocking and rolling and all kinds of stuff. Is that sustainable? I don't believe it is, because I've never seen it sustained. I mean, when I say never, I'm going to say maybe 1 in 100,000. I have no idea. But the retail failure rate, as you guys know, is over 90%. Why do you think it is? Because retail traders come in here, they don't understand the business, and they think it's a video game. You all grow up on video games, and you think now you can attach a dollar sign to it. It doesn't work that way. This is business. So you got to approach it like a business. So if you're going to approach this like a business, then I think what you need to do is pull the lens out and build process and understanding first, and tackle the issue of fear and discipline. You can't do that in short term, in my opinion. You got to take the lens out so you can prepare yourself mentally for where a trade might show up, and slow it down. Because what you're learning to do here is actually read a language. And to speak a foreign language and to become fluent, which means faster. And think of a language as when you're fluent, it's a fast time frame, right? Speed. Well, when you're learning the language, you got to slow it down, right? It's no different than driving a car. When you first learned to drive a car, you weren't in Indy 500 or Formula One. It was all intentional, right? This becomes intentional initially. So when it comes to learning, not only do we have to become intentional and develop process and understanding, we have to know where these trades might show up before they show up, and vet them, and then determine, do we have a statistical edge, even though the outcome of any individual trade is random. And the thing about it is, when you don't have a vetted trade, and obviously if you can see what I do here and share, it's not about frequency of trading. It's about understanding a location and defining change. Can you become a sustainable, profitable trader in this time frame? If you can't do it in this time frame, I can assure you won't do it in a shorter one, because then you have more emotional instability. And the idea of structured trades is that you can replicate them, even though where they show up and how it manifests itself and the outcome is random, and then you can create a tangible statistic. Vetting trades is knowing what you're going to do before it shows up, not where it'll show up, if it'll show up, and the rest of it, or how it manifests itself. That's what trading really is. And then the outcome is random. The patience that you must develop to sustain yourself is going to be the hardest part of this. You're going to see trades that you perceive as trades show up that are not qualified. This is one of them right here. And I know there's traders in TraderLab who took this. Is it a vetted, structured trade? No, it's not. But why would a trader take this trade? Because of FOMO. And here's the part that's so difficult. They can get paid on this trade. This rotation could have done this as well as this one. The difference between this trade and this trade is location. Now, the thing I was talking about, and I was mentioning about tangibility, is when you don't have a plan and the discipline to wait for trades at specific locations that are vetted, you're now being controlled by your fear of loss, and loss means fear of missing out, FOMO. So now you are under control of emotional stimulus, not calmness and preparation and anticipation. That is the Achilles heel, I believe, for developing traders. This is not important. This is just one trade out of thousands if you have a career. Is this trade significant? Is this FOMO worth going out of business? This is what's going to separate sustainable traders from those who can't sustain themselves. And I stick by that because I've seen it over many, many years of training other traders. Some people just can't get past it. So how do you get past it? If you don't have a statistic for this, then you don't have anything tangible. If you don't have something tangible that gives you the courage and the discipline to wait for this, even if you miss it, then it's job well done because you followed your plan. If you take this, then you're responding to emotional stimulus. You're not responding to vetted plan. I hope, and that's not a criticism. It's what's the obstacle that we all have to deal with. Once we cross this and the mid, and we're outside of yesterday's range, it's hasta la vista. Shorts are in the squeezeteria. Turn the barge around, get long. I don't call trades. My goal is to get traders aligned. And if you're in TraderLab, you would also know that when the condition changes, and it isn't about this, even though this is where it changed, it's about structured trades in alignment. So this, when we're inside, and a very broad stroke until we get outside of the range, depending how you define it, and I'm slowing it down, there would be no long until this is a structured trade here. So I hope that makes sense. This is the TraderLab, and if it's this is a slow boat for you, then it's not for you. My goal is that traders survive the learning curve, and then as you develop, you can take this down into shorter time frames. This is a target right here. Why? Right? Because of that. Is it logical? If you took this trade from there to there, and this just supports to there, this could be an add or not. This can be an add. It's called mean reversion. It's another structured trade in the TraderLab. It's an outside-in trade. It's called a reversion. By the way, what was this? Reversion on the short side. You see? Same thing. Once it turns around, you can be taking this. You can be taking this to there. You can be taking this, because this is reversion, to there. And then we have our high probability statistic that squeezed the shorts out over here and then wherever. All this is structured trading. Hope you find it interesting. Does this make sense, guys? This is a TraderLab, and it's up to you. Hope you're getting some out of this on YouTube. Notice what's going on up here. Now, what do we know? Let's look at what we know. We know what was too high here. We know we have over 90% probability to take out first hour's high or low. I don't know about you. I'm going for this. I know that as long as this probability exists, I'm going to be taking longs only, and I'm also open for taking stops because that's the way it works. What are stops? Personal failures, lack of approval, or just overhead and cost of production? What do I know about this? What is that right there? Isn't that an outside edge? And where did it come from? It came from there. How does it show up in the profile? Let me try to move this. Remember, if I crash, which is very easy for me to do here with this situation I'm in, I will come back. So what do I know? I know this is resistance. I know because I found my sellers there. Okay, that was my sweep. So I know this is too high. When I'm coming back, I know the following. I can target this. I call them variable high volume nodes. I made it up, who knows? And I know there's stops above the high of the day with over 90% probability to take this or the first hour's high or low out. And again, I'm going to step out on the ledge and say this. Because why? The reason we went down was negated and the auction was disrupted. And what does it mean? We can come back to where the disruption was. And that's how the market or the auction tends to work. So if that's the case, where was the last place? There. And if the auction was disrupted, and this is resistance with a 90% probability that I'm looking for the auction to potentially continue from the disruption. So first place, and then I get above here and there, then, put your helmet on and we can start motoring up. And that would put eventually this, not a recommendation, this one. So this would be the next area. And if we can get in here, and again, it's not a recommendation, it's just the auction. So can you see how, if you understand how this thing is laid out, not what it'll do or where it'll do it, but what might happen? So what do I know? I know this is weak, and I got my buyers. This is migration. I got my buyers. This is resistance. Now we have to look for outside edges for continuations. I get VPOC migration, going north, having a wonderful time. Resistance, let's just look at the structure. Oh, can't move this. Having a hard time here with this laptop. Remember, it's subject to go south, literally. This is your outside edge. So what can happen with this is, it's called mean reversion. So it's outside in, back to here. And I got to clear this to continue. I got a lot of sellers sitting up here, so that can cause our rotations. So what you do with this is, since we don't know what it's going to do, where's my support? It's there, under here, and here. Let's look at the rationale over here. Sellers were here. Look at the cursor if you can see it. Break low. Sellers are here. Absorption is here. So we move higher. New retail price. Too low. I pull outside. This is the retail price. My buyers show up. Look to the right. Here. Then what? I go up. I got my sellers here, and I know this is resistance from this morning. That's all I know, and I don't know anything else. I have buy stops above here. So I'm getting a counter rotation. Okay, what do I do now? Well, what do I know? I know my stops are here. Subject to my plan, it's trade management. And again, it's up to you. What I know is this might be too low, this might be too high, and this might be too high. I'm still working with a 90% probability to take out the first hour's high. So for me, and it's not a recommendation, I'm only going to take longs. The question becomes, if I get taken out on a rotation, and remember in all time frames, market goes up to go down, market goes down to go up, market goes up to go down. Where am I going to find my buyers? Well, I got stops there and there. I know this might be too low. So if I come outside and pick stops under this swing, I can then come back here. I don't have to even get under here. This is the unknown, part of the thrill. So I can keep it here. If I get taken out, I may just put it subject to my plan again and my time frame. I may just put it back on again. Or I come down under the mid in the VWAP, and subject to, I have another area here in alignment. I already know I'd be looking at longs here. If I hold this, it's all fine. I got to get above here. I got to clear there over 90% and then leave the helmet on. I don't know anything more than that. I'm going to ask you, do I need to know anything more than that? And the other part is, how can I know anything more? If you're going to quote levels, just be sure when you quote a level that you're using software that is accurate. Certain platforms are not accurate for day trading. They aggregate their data. It's just not the same. In Bookmap, you need to use a quality data provider. I use Rhythmic. There's others, of course, you can use, but this is market by order. They're all tagged. That's why we can see icebergs. We can see stops. It's really important that if you're going to day trade, that you use the best tools. And again, that's your decision. But be sure, If you know you're using a product that is not known for accuracy, that you confirm levels and just post in the TraderLab, ask about it. It's not a big deal. We're all here to support each other. Does the sweep at 69.55 tell me anything? I don't. Am I missing something here? I don't have a sweep here. I don't see a sweep. Are you talking about? I don't have a sweep. What time is that? Greenhorn, can you put that in there? Give me a time. Here's what I know. I know I want to be long. I know if I counter rotate, I get taken out based on my trade management. Oh, if you're talking about this, yeah. What does this tell me? Well, I came to a location. If I don't get below here, then this is negated for me. This supersedes this. And I have to get above here and here. This is really kind of the ballpark for me right here. I need to clear this. Now, if I don't clear it, I can come down over here. So I know what might happen. Okay. I don't know what's going to happen. So I'm not in the business of saying it will do anything, but I do know what it might do, and I know where. So I know it might come down here and take these weak longs out. I know this is the closest area that's vulnerable, and I know these sellers were absorbed, which is why it didn't go down. And I don't know that until the buyers are above here. The other part about this is called mean reversion. So when the market's coming outside, I can look out here and I can look at this high volume and I can look at it and go, well, maybe that's too low here. And I have volume here, which is what this is all about. So I know this might be too low. I also know if I come down here, I can have VWAP to VPOC, which is the same trade I showed you from the short side when we were inside yesterday's range. Now we're outside yesterday's range. I don't have any shorts. I mean, let's put it this way. I'm in this primary rotation, which is alignment with, quote, higher developing time frame. I only have longs. So that's it. So I'm only looking at longs because I want to keep my brain focused on one side of the trade. I don't want to be going, oh, I should sell this, I should buy this. No, I want to be managing my longs. I want to be going for statistical probabilities. I want to be in alignment with the perceived trend, which is up. And unless I fall completely out of this thing, I'm only taking longs on counter rotations. That's alignment. That's it. So, and the probability of taking this out, which just disappeared, is over 90%. So here's the question for you. Do you think it's more likely I'm going to take out the low of the day versus the current high of the day? If not, then what would you be doing? Taking longs? Taking shorts? What do you do? So what I see is longs only on counter rotations. Trade management, however you determine to do that, doesn't matter. Here's the question for you. And this is what I advocate for certain things because I see what works over the years. You have to know what you're going to do, not what the market's going to do, because you can't know. Your plan, and ask any trader who's been around for a while who actually has the ability to create sustainability. We don't know any of these random rotations or a tweet or somebody trips over the cord at the CME, any of this. We don't know what's going to happen. Just like the news on Greenland over the weekend or the news yesterday, I really didn't mean it, whatever. All of this is part of trading. So if you can't predict it, you have to know what you're going to do based on your plan, not randomness. So If I know I only want to be long, I'm not going to take any shorts. I will use counter rotations for continuation longs as long as I'm aligning with I perceive to be context, which is up. I would not take a short, and it doesn't matter to me if it goes to zero. It's not my job. My job is alignment with the dominant side and to squeeze out the side that's on the hook. Who's on the hook? Longs or shorts? Doesn't that tell you the side? So for me, where were my buyers? Where was my outside edge? Now, this is reversion. Where am I looking to go? Why? Market short. Where's the buy stops? Here. Let's come back. Let's try to look at a couple pieces. What do I know? This was the last price that was too low. What happens to the longs in here and the longs who bought early this morning? Under the bus. Thanks for playing. Have a great day. We take the shorts down. Now, if that's your plan, or you're just waiting to get long, or you just trade one side, or once it comes outside of this range and we have VPOC migration, which means we found too low, and I'm slowing it down for you. And what else? Let's come back. What was that big piece? ETH low at value area high. You see what I'm saying? What did we do? We opened in a gap outside of value. That's the auction. And then it's, what's happening, Tom? I don't know. What do you think? What do I know? Too low. Can it go in there? It could do anything. So, then what? Who become the buyers? The shorts. Are they initiating or are they responding? They are responding, and we're going down on the weak longs. What is the condition of the market? Wouldn't you say we found too low? Wouldn't you say if this is yesterday's high volume retail price and we open out here that maybe this value and this last high volume price is too low? Wouldn't this suggest that after the selling, which is a valid trade, if you trade that side, now you can take the longs for the statistical probabilities because we're in the squeeze-area, and this auction was disrupted by news, and now the news is removed. Where might we come? There, or not? Is everybody tracking? Is this logical? Where are we trying to go? Here. Next area we need to be thinking about is this and this. And none of these are recommendations. It could do anything. Is everybody with me? Is this making sense? Is this too complicated? Do you think if you simplify it, slow yourself down, anticipate behavior, not try to get cute and become a whirling something or other, does that create the path to sustainability? Which do you think it is? And where do you want to be in this business? It's a question. That's why I created TraderLab. I'm not here for anything else to try to help developing traders survive, build profitability, slow themselves down. Once you learn a broad stroke, you can start compressing. But you can't go the other way. It is a top down, bottom up. And then as you start going down, you are now, see, what's happening here is the same thing that happened this morning, but in a larger time frame, if you will. What is this? The longs in here get taken out. The shorts in here get taken out. The longs in here, we counter rotate. But what was this? Let's come back. What is this? Too low. What happened at the low of the day? Try to take it back. See if you don't see something similar. Maybe I can do this. Again, guys, if I crash, it's because I'm demanding too much of this little dying laptop, literally dying. Hate to say it, but I really like it, but it says I've had enough. This is the change. Too low. See? If that's too low, then what's happening? And this is where the shorts are. If I come out here, this is the last gasp, and I have to get below here and clear too low. Once this is done, it's over, okay? And the other part, if you weren't paying attention, is getting back outside of yesterday's range. That's it. You need to know that. So there's our 90% probability. Past performance not indicative of future results. Now we have to watch this. We can get counter rotation here, and potentially, and these are not trade recommendations, we can rotate down here. Now we have two trades in the TraderLab. One's called the IBF, which is a short mean reversion trade. The other one is called an IB continuation trade. You have to be very careful right here. So where right now is our outside edges? Here, if we can get above this microstructure, we can continue higher. And you just keep going with the financial food chain up the ladder. If we get profit taking here, we can rotate here. If the trend is up, I have no shorts. And it doesn't matter to me if it comes here. If it comes here, I already know I'd be looking for a long to come back here. Why? It's aligned with the context, which is up. So I have two possible trades, and these are not recommendations. I have a long, potentially could develop in here, but I have to clear that. The other part is, and these aren't trade recommendations, or I'm going to come back here and potentially get these guys out in a short time frame, because there's sell stops, and sell stops. So what do we do with these rotations? The market goes up to go down to go up, goes up. See the short rotations go down to go up to go down to go up, goes up to go, who knows, down to go up, but we don't have a trigger. So what do? We wait. So I have two trades here, potentially. One is not qualified in the time frame. In my opinion, not a recommendation. It might be yours, and that's a short counter rotation, and I'm using the term specifically counter rotation. It's not. I would not take it. Why? I'm interested in the trend. What is the trend? You heard the old saying, trend is your friend. It's up. If I get a counter rotation, what do I do with it? Two choices. You're a counter trend trader. You're already profitable in alignment with the higher time frame, or you're waiting for continuation longs and you're not taking the shorts. You see, that is plan specific. What do? Well, I like to trade from a Barca launcher. So for me, I just want to stay with the side that's advancing. I call it the advancing army. And the counter trend trades, in my opinion, do not have an edge unless your time frame is maybe from there to there or there. Is that give you a good risk reward? I don't know. This is important. What happens right here and right here. This is resistance. It's right there, right here. I know traders who will sell this. Here's the question for this astute group of traders. Is this a short, or might this be a trade management opportunity versus a short? Is this a sell trigger in your book and a trade management opportunity? Or where does this trade fail? Do you know? Do you sit through a counter rotation and your teeth chatter because the quote context is up? Or do you fade this and stand against the trend? The answer has to already be in front of you. And I don't mean here in your plan. All the questions are answered in your plan, not the random rotations. I'm going to keep saying that until I fall over, because you ask any trader who's in this business that is not just visiting, they're going to tell you the same thing. You're operating in an environment that's 100% random 100% of the time. The market has noise. That means harmonics or rotations. When you're looking at rotations, you need to understand it just doesn't go one way most of the time. It rotates over itself. Because think how this works. If I get buyers here, what happens when I run out of buyers and I get profit taking over here? What's it going to do? It's going to go the other way. And if it comes the other way, the buyers who are buying it here, and look where the volume is. Do you think this is coincidental? Think this is a heck of a deal? Think shopping. What's going to happen? They might show up. I can buy it here because the buyers were there. And look where the sellers were. There and there. This is a very short time frame, isn't it? Well, if I get my sellers here, there they are, but I know my buyers were here and were down there. There's the absorption, and this is the support. There's the resistance. I'm in a short time frame, and I pull back to here, and I already have that and that. What happens? These sellers, whoever they are, become buyers. Now I have resistance, and I have a sweep at my location. What is my structured trade? Well, counter rotation, microstructure. Sellers are below the buyers, but what's the trend? Up. What's my structured trade? Win, lose, or draw? IB continuation. Are you going to sell it? Up to you. Me? Not so much. I hope you're getting something out of this, guys. Remember what the objective of TraderLab is. Help you understand the business. Slow you down to try to remove FOMO. Help you anticipate behavior and then stalk it. Wait for it. Calm yourself emotionally. Go, okay, where's my next trade? You'd have a trade book you'd open up. You'd see what qualifies the specific trades. Does this meet? Does this qualify? In other words, the conditions of the market. What trades are qualified in this condition? There's just a number of them. And where might that show up? Well, here's one right here. Where might it show up? Right here. What do? I put the trade on. What happens if I get stopped out? I did a good job. I followed my plan. Do I know what's going to happen? No. Do I accept that? Yes, no. I don't accept it. Trading's not for you. You need certainty. You can't get it. So you have to accept uncertainty and then have discipline to follow a plan that has an edge. The certainty of following a plan with an edge, and again, with edge, the certainty, if you execute it, and that's the part, is the dollars will flow to you. That's absolutely certain because we have a business model called gaming, right? But in the casinos, they pay the gamblers too. So we have to pay because it's overhead and cost of production. So we have to get over that. You know, our attachment to being right and getting approval doesn't exist here. We can't get it. So what we can get here is building out a business with edge and then looking forward for the edge to show up and then executing. It's a curiosity. I wonder what's going to happen on this trade. I don't know. Am I doing the thing I'm supposed to do? Yep. What happens if I take a stop? Well, next trade. Overhead and cost of production. Who experience it with a sense of detachment comes from the confidence of knowing you actually have a plan that has a statistical edge that favors you, not the outcome of the next trade. Okay? This is really the kind of what they call the secret sauce, but it is no secret. It's just the business. So when I think about TraderLab and what I can do to help developing traders, it's to slow them down and not play a video game, to learn how the market works, and to extract metrics. You don't need a lot of trades to become profitable. You need a minimum number of trades to collect samples, so you know you have an edge. I hope that's making some sense. And if you're visiting in YouTube, I invite you to come back, come to TraderLab and visit. So any questions, guys? How are we doing in YouTube? If you have a question, use the link down there. TraderLab's available to all of you. There's no cost for it. It's a community of traders. The idea of TraderLab is to help you build the business out. This is important, what happens right here. We want to watch this area. And this is a particular, right here is order flow phenomena. If we can clear this, we can then continue on our merry way. So right now, no reason to be short in my book, no reason not to be long, no reason not to be holding a long trade, and it's not a recommendation. It's just the language. So do you have a reason not to be long? Up to you. What is your time frame? What's your plan? For me, just sitting long. Not you, me. Are you interested in this? You can learn it in TraderLab. And it doesn't mean you'll ever be a profitable trader, because you're going to have to change what you believe trading is, and you're going to have to rein in the lunatic under the hood. I call Hyde, Jekyll and Hyde. The way you're going to get control potentially is to know where your trades are before they arrive there. It's like a bus. And then when it does show up, does it meet your qualifications? That means trigger, obstacles in front of it, getting risk neutral. Are you in alignment? And you're going to take stops in spite of it all. Does that make sense? How are we doing in Discord? You guys aligned here? Is this making sense? If you're visiting in YouTube, use the link in the bottom of YouTube. If you're interested in TraderLab, there's no cost for it. By the way, the thing about TraderLab, it's serious. It's about the business. It's not romper room. I'm sure you guys have visited a lot of chats. There isn't the only one thing you need. If by now you probably have figured out there's so much hot air being blown around, you could get a sunburn on your face, even if it's below zero where you are. By the way, it's almost 90 degrees where I am. It's actually hot. And at my home in Chicago, it's, I don't know, 4 degrees, 5 to 6 something Fahrenheit. That's a little hard to take. So, but very hot in Costa Rica. Remember, if I drop out, I will come back. I'm in an unstable environment here. You guys have any questions? Post them there in the Bookmap Discord TraderLab. And there is a library of webinars in there that is open to all of you. Ned, thanks for curating this for all of us. You'll see if I can show it at TraderLab. Again, if I drop out, I'll recycle in a couple of minutes. This is what the TraderLab community looks like. A lot of stuff in here. Thanks for posting, everybody who contributes. And there's many traders, I'll tell you, it's a very large community, and there's a lot going on in here. You can learn. The idea of TraderLab, it's not about what I do. The TraderLab's created for you. So you can see it's very active. There's a lot going on. A lot of charts getting posted. Let me also show you this. There's a lot going on in here. And it's a mutual support community. You know, it's just, let me try to show this to you. There's a library of webinars. Start with this one. The prior webinar talks about anchored inputs versus random inputs. The analogy is in a casino when they play, I always like to say blackjack, they just deal the same number of cards. It doesn't matter if they paid a gambler on the last hand $100,000, they walk out in the suitcase, they don't change the game. What do? We're emotionally attached to the last trade. Now we do something different on the next one. If the casinos did that, they go out of business. The only way they extract dollars from the gamblers in a random distribution of outcomes is doing the exact same thing. So this is the primer webinar. It's got about 36,000 views. You might want to think about why. Now, what is the TraderLab? This is advanced trader education. Is there a holy grail of trading? Well, how close can you get? No, there's no holy grail. Okay. Day trading, fantasy versus reality. Stop gambling, start winning. Trading in multiple time frames. That's what I'm sharing with you here, really. How about high volatility reports? Understanding squeezes. That's what we're talking about all the time. What's a squeeze? It's the rotations on top of the fuel. And in all time frames, if you will, the market is going to go into the wrong side. Now, the thing about the wrong side, what is the wrong side? That's time frame. Now, a document section, not only what I have in here, but what others contribute. Remember, TraderLab's a community. And then I have other streams. I always get asked, well, can you show us real-time trading? I think it's more important that you see how the market works and then review the streams. But if you want to see real-time trading, I have streams in here up to 4.5 hours long of just doing my thing in short term. More real active trading, let's call it. So overactive trading is just going to blow you out. It's much more about intentional, measured trading, slowing it down so you can build out the plan. And remember, what was the last trade in the TraderLab? Well, this is reversion. This was a long. This is whatever you want to make it. IB was the target, 90% probability. This is called the IB continuation trade, structured trade. This is where it is. And then you're going up the financial food chain. Where to? Good luck with that. I wish I knew. Where am I trying to go? There and there. Not a recommendation. And then it's trade management. Can you learn this? I'm going to ask you why not. Do you want to? Come to TraderLab. And that's it. Then you roll your sleeves up and you have to remove what you think the business is, your fantasy, and what you've been fed, no matter how long you've been in the business, because what most of us do, me too, when I started out, and I'm doing this 47 years, so believe me, I've had more opportunity to do more things that don't work. The thing you need to do is change what you believe. And that's not easy because you've been fed a lot, but you've also believed because you're measuring this business against planet Earth, what works here in the environment most of us operate in. Most of us are not operating in a 100% random environment. We're working in things where there's protocols, whether it's social-based protocols, how you relate to people, the approval you get, whether it's raising your hand in school and getting approval, you get the answer right, and how you feel emotionally when you get the answer wrong. When your parents scold you, think about it. Through our whole lives, there's this reinforcement, and then our behavior is shaped, wherever it is. Okay. And then there's the primal wiring that seeks approval. And when we went back in the Stone Age, how did we get approval? We went out and hunted, caught something, brought it back to the cave. Very good. And the tribe or the clan or whatever it was survived. Yet we were concerned always about us being that there were apex predators out there, so we wanted to avoid that. Obviously, saber-toothed tigers, maybe a woolly mammoth or two, who knows, right? And so when we're in an uncertain environment, those primal behaviors are activated. Right here is uncertain, isn't it? Well, what should I do right here? Well, I'm not doing anything. But what about when we saw this rotation here? Is that a short? Other traders are going to say, oh, looks like it's going to go down. Well, there it is. Okay. Is that a short? That's my question. Well, if we think the trend might be up, are you only using it for longs? When we had this IB trade that I was mentioning to you, and I see a microstructure, is it a short or is it only an opportunity for a long? Is this making sense? How do you know the answer in an uncertain environment? Because you understand market mechanics and you understand nobody knows the answer until hindsight. So when you're fearful, you have to rely on your understanding of market mechanics, auction market theory. How does this market work? Who's off sides? Where's the fuel? Where's the behavior? Where's the statistical probabilities? How do you manage your trade? And yeah, you're going to take stops because that's how you stay in the business. You okay with that? Then come to TraderLab. If you're not okay with it, then you probably should find another solution. I haven't found another solution myself. It doesn't mean it doesn't exist. I hope that makes sense. Appreciate you guys visiting. Any last questions? And remember, if you're visiting in YouTube, I can't see your questions, so apologies. I have a defective laptop and no multiple monitors, and this is barely working, and it crashes randomly. So I only have my phone working for Discord. You guys in Discord, any final questions? I got a couple of minutes. Hope you got something out of today. Please, if you're visiting in YouTube, please leave a like. And we have to watch the behavior here. This is an area to observe, and so is this. Let's see what it does. None of these are trade recommendations. This is a microstructure, the outside edges over in here. So we got to watch this. Let's just watch it. Not a recommendation. There's absorption there. Don't know until hindsight. I'm sorry, absorption was here. We have our sellers here. We have our buyers here. This is an important location of behavior. This is an outside edge. This is all micro. If I come down here, I can rotate, come back up. This is an area of support, and this is all time frame oriented. If you're trailing your stops, you can just have them under here, and if you get taken out, then you get back in the Barca Lounger. Again, not a recommendation. What do I know about this location? There were buyers here. They were absorbed. That's why I got buyers there. What do I know that happened here? This is an order flow trigger right there. That's what I know. So what do I know? This is an order flow trigger. You can learn this in TraderLab. It's not a recommendation. This is an outside edge. This is a potential continuation long, and you're going to take a stop like the rest of us. Oh, do you think, here's the question. Do you think you can do this without paying overhead and cost of production? Oh, I know you don't like to pay bills. I have to tell you I don't. But what I understand is, in order to have yield, I have to support my business by paying my overhead and cost of production. The end question becomes, net after expenses, am I have a profitable business? Isn't that the real question? And if I'm in TraderLab, no matter the outcome, would I understand what this is all about? What do you think? Can you learn this? How are we doing? Please give a like if you're visiting in YouTube. This is the TraderLab process. And again, it's only one way to slice and dice the market. But you can see every day here in the stream, whether it's in real time or I'm showing you how it works, and I try to do both if I actually have time for it, is to show you that process and understanding of how the market works, why it does what it does, where it might do it, and then vetting structured trades might be a way to create sustainability and build a sustainable business. Again, if you want to gamble, go to casino, get the cocktails and the tickets to the buffet. It's entertainment. This is not entertainment. This is work, business, and if you do the work, I think anyone can learn how to trade if they come to TraderLab, but then it's going to be up to you to change what you believe and learn how to vet and exchange tangible statistics for emotional instability, because emotions are generated by chemicals in your brain. You can't override your feelings. That's why you do things that are not in your best interest. What overcomes intangibility, where you only have emotions? That's statistical probability. So you can touch a statistic. You can't touch the chemicals being released in your brain because your primal brain is trying to protect you. It cannot differentiate between the saber-toothed tiger and the uncertainty. Hope you got something out of this, guys. If you're visiting in YouTube, please leave a like. Also review the previous streams. every day builds on the previous day. This is a developing story in real time that changes in all time frames, but there is method to randomness. If you can separate and learn to operate in randomness with method, you can create probability. Probability with discipline can create profitability. Don't forget to like. Thanks for visiting. Subscribe to the channel. Also, use the link in the bottom of YouTube if you want to visit the TraderLab community. There's no cost. You don't have to be a Bookmap subscriber. It's open to all of you. And this is about the business of trading. Thanks again for visiting TraderLab. Look forward to seeing all of you tomorrow. And thanks again. Don't forget to give a like on the way out. Support the stream. It's the only way the streams are going to continue is if you like it. Thanks, guys. Look forward to seeing you soon.